Hello and welcome to Core Finance. I'm Matt Brown. I'm joined down the line by Ryan Littlestone, who is an analyst and trader at ForexFlow.Live. Good morning to you, Ryan. Are you well?
Yeah, good morning, Matt. I'm very well, thanks. And you?
Yeah, very well. Well, thanks very much for coming on the show today. Lots to talk about. We're looking ahead at the Bank of England tomorrow. It feels like a rate rise is nailed on, let's hope. We've seen some strong PMI data out as well this morning in the UK, which will help support the case for the rate rise. But let's have a look at, first off, cable on the 4-hourly chart. We've seen a grind back up to some recent highs around the 133 handle of late. From a technical point of view, where do you think we can go from here?
Where we can go is going to be the question indeed. You know, there's a lot of expectation into this BOE hike or into this meeting. You know, we're at some 90%, 85, 90% expectation on this, and that's very high. There's a reason why the expectation is so high for a hike when we've not had any of the BOE members, MPC members, actually put a date down in any of their speeches. You know, all we've had is it's maybe appropriate to hike in the coming months. The reason the market's jumped on this one is obviously because we've got the inflation report alongside it, and by proxy, that's used as a Bank of England press conference, monetary policy press conference. So the main thinking is that they'll use this to, you know, initiate a hike and be able to explain it and give the forward guidance for what they're going to do in the future. The issue I have is that the data. There's only parts of data that support a hike, and if you look at it and compare it to the August BOE announcement, you know, we're not in so much of a better place than we were then. It's pretty gone flat, the economy. But the thing that has stepped up is core inflation headline, but particularly the core that jumped from 2.4% to 2.7% it is now. And that core number is a big deal for the Bank of England because their mandate is, you know, price stability and hitting that 2% target, and that's probably the kicker that will see them hike. But I don't think it's going to be a foregone conclusion that they hike. I don't think it's going to be a big vote for a hike. It could be pretty close. But even so, it's going to be a dovish hike, I think, and I can't find a single good reason why the pound is going to be higher afterwards, unless we get some really hawkish messages from it. But looking at the charts technically, you know, we've come up over the last 3 and a bit days, we've come up 260 pips on virtually nothing. And that is, again, that's the expectation trade coming in. So while we get buyers coming into the market and buying it up on the expectation, the higher it goes, the more volatile the reaction is going to be if all those longs start unwinding after the event. Understood.
I mean, when I trade, I've always had the mantra of not trading ahead of announcements and big numbers, because you can technically it can be like flipping a coin. It's always waiting for the announcement to come out and then move and digest what's being said. That's me personally, but I mean, looking at this, I'm tempted to go short, to be honest, because I think the hike is priced in. As you rightly say, not much has changed since August, and there could be a case of, well, look, if the Bank of England does disappoint, we could see cable sub 130. And if they do bring the rate hike as the market expected, well, we're pretty much staying at this level.
Yeah, I think if they don't hike, they're potentially going to tighten up on their signal of when they will hike. As I say, they can't ignore the core number in inflation, especially if that continues to rise. But they could punt till deck. And that might lessen the blow that the pound sees. Obviously, you'll get the algos who will immediately on the announcement of no hike, they'll slam the pound down. But then as we read the details, if they do mention that they're looking at deck and that's more of a certainty, then I think the losses will be limited. But I'm in agreement. As I say, you know, when you trade, you add up the reasons for buying, reasons for selling. And there are far more reasons to sell the pound into this announcement than there are to buy it. That's what I'm probably going to do. I'm either going to stick depending on where we are, obviously, I'm going to stick a very small short in right into the announcement. And then if I can get in quick enough, if we do get a hike and a knee-jerk rally, then I'm potentially going to sell that, depending on what the message is alongside it. But yeah, I think the greatest play is going to be shorts into this. But you've got to be prepared to perhaps wear some pain, because it's going to be pretty volatile.
Understood. And let's look at the sterling versus the euro sterling from a technical point of view. Lots going on, obviously, with Brexit negotiations, Europe, etc. We're reaching kind of lows for the euro here, and it does feel, certainly the euro against other currencies as well, technically could be breaking down and seeing a lot of bearish signals. Is it the same for euro sterling at the moment? It
is at the moment. After the ECB, focus has now switched to the pound side. So obviously on euro sterling, then we're looking at the Bank of England, and it falls down to the pound. And what we've seen is, potentially a central bank, as we heard from the ECB, that they've set their stall out, and that sunk the euro. Now the Bank of England are potentially hiking, so the policy divergence there is greater, and thus we're seeing euro sterling under pressure. But we're at a quite important level down here at 87.45, which was around about the September lows, which marks a decent bottom there. And we're here testing that level now. We had a little dip under, but it's not properly breaking. And a break here could be significant. But again, with a big event coming up, the techs kind of sort of go out the window, and especially tomorrow into the announcement, you can forget your tech levels within sort of 100 pip radius of both markets. But what we look for when we trade these things is if we do see a big level break on a big event, and like we're talking about this 87.45 level, if it does break because of the headlines, it doesn't mean you ignore it, because if it moves 100 pips below, then you remember this level, because if the price comes back up, it could well start becoming resistance.
Yep.
And then it will have a better say in the fortunes of direction. So we keep these levels on the charts, and you trade them both ways, and you take it as the situation decides.
Fantastic. So some good advice for all viewers and traders out there. Ryan, good luck, I should say, with tomorrow with the Bank of England and your trading there. Thank you very much for joining us today. Ryan Littlestone, analyst and trader at ForexFlow.Live. Have a good day.
Thank you.